Hello and welcome to week 2 of Full Circle's Financials educational series. Today we're going to be talking about liquidity, which may seem like a timely conversation at this point. What is liquidity? It's the efficiency or ease with which an asset can be converted into ready cash without affecting its market price. So what does that mean? You go to the bank, you ask for cash, they give you the cash because there's no conversion. Now I know that if you're working in different types of currencies, there's a conversion, but they can usually make those conversions relatively quick, but it does obviously affect your market price. But at the end of the day, if you go in and ask for cash, you can get cash from the bank. Other assets that are considered liquid because you can efficiently convert them to cash would be stocks, bonds, and mutual funds, which trade on the open market exchange. Usually you can do that within 3 to 4 days, depending on the the trades that you're placing. For instance, most stocks are trade plus 3, which means you place it and then within 3 days that cash settles into your account. So once again, it is the ease and the efficiency of converting it into cash without affecting its market price. Obviously with stocks, bonds, and mutual funds, your market price is affected on what's going on in the market, but you still have that ease of efficiency getting it done. It just depends on whether or not you sell it for what you originally wanted to sell it for. Some ideas or examples of illiquid assets are going to be collectibles such as stamps, coins, and artwork, because even though it does have a perceived value, it may take you a little bit longer to find someone that is willing to pay the price that you want for those assets. Therefore, they are considered illiquid because you do not have the ease and efficiency of converting them to cash. Another example would be business ownership and or real estate. Liquidity needs differ for everybody. For instance, you may not have a whole lot of liquidity needs because you have a lot of income coming in, and so therefore you can invest your assets in more illiquid assets for the longer term investing. Or you may be someone that needs to keep considerable assets in a checking or savings account based on your expenses. That's the reason financial planning is so important, because when it comes down to financial planning, it's not just about creating a mutual fund or stock portfolio for you. It's also the liquidity of said assets and how those work for your short-term and long-term goals. For instance, most people might tell you that you should have 3 to 6 months sitting in your checking or savings account what your expenses are. So for instance, if you have, $5,000 a month in expenses, you should have between $15,000 and $20,000 sitting in a checking or savings account. That way, if an emergency arises and you need to be able to have liquid assets to pay your expenses, you have those readily available to you as you raise capital from other areas. Once again, planning is so important in this because if you have a plan in place where you know what your short-term debts and or goals are going to be, consider, compared to long-term goals and or expenses, you can kind of set up your investment portfolio based on the liquidity needs now and liquidity needs later, because it's not just about how much you have now and how much income it can produce. You also do need to have the ability of liquidity in your portfolio. But that's basically what liquidity is. It's the ease or efficiency in which an asset can be converted into cash without affecting its market price. Once again, cash is cash. Stocks, bonds, and mutual funds can be easily converted to cash. However, there is a market price adjustment. Sometimes it's a good market price adjustment because you sell your stocks for a higher price than what you purchased them for. But you can also end up selling your stocks, bonds, and mutual fund for a lower price. But at the end of the day, it's still the ease and efficiency that you can convert it to cash. If you've not had your financial plan reviewed recently, we'd be happy to do that for you because liquidity is just as important as what your stock portfolio looks like. Have a great day, and we'll see you guys next week.